Imagine waking up and realizing that the bloodstream of the global economy just had a massive stroke. We're not talking about a market correction or a diplomatic spat. We are looking at a hole in the global energy bucket so big you could fit the entire history of the Industrial Revolution inside it. Brent crude just hit $101, and if you think your gas bill is high now, wait until you see what happens when the world's biggest gas station locks its doors and throws away the key. Welcome to Week 2 of the Iran conflict. It's about to get very real. Phase 1 was the fireworks, the strikes, the headlines, the chaos. But we've moved past the scary news phase into something much more calculated. This isn't just a fight over borders anymore. It's a systematic attempt to bankrupt the modern world. Think of it as a decapitation strike, not just on leadership, but on the very pipes that keep your world running. Let's look at the oops moments that led us here. On February 28th, the strike started. By March 2nd, the Strait of Hormuz, the world's most important throat, was squeezed shut. By week 2, Iran's new leadership decided that if they can't sell their oil, nobody can. They didn't just close the gate, they mined the driveway. We've officially entered the largest supply disruption in human history. To put that in perspective, it's like taking every car in Europe and suddenly removing the engine. This chart is the stuff of nightmares for every CEO on the planet. Pre-war, 57 tankers a day moved through that narrow stretch of water. Today, we're down to one brave, or perhaps very lost, ship. The Strait of Hormuz has gone from a superhighway to a dead-end street. And the detour? Going around Africa adds 14 days. It's like trying to order pizza, but the delivery guy has to walk across the continent because the main road is on fire. Now you might think, can't the neighbors just pump more? Well, look at the pockets of the GCC. Saudi is down 23% because their storage is literally full. They have nowhere to put the oil if they can't ship it. Iraq? Down 70%. It's like having a mountain of gold, but the only exit is a keyhole. Even the backup pipes through Saudi only cover a fraction of the mess. We are missing 14 million barrels a day. That's enough to fuel every flight on Earth 3 times over. If you think this is just about your car, you're missing the forest for the trees. We've reached the cascade. This is where the energy crisis stops being about fuel and starts being about everything else. From the plastic in your phone to the food on your plate, the price tag of reality is being rewritten as we speak. Here's where it gets scary. Coal is back because gas is too expensive. Europe is basically burning the floorboards to keep the house warm. Then there's fertilizer. A third of the world's supply comes from this region. No fertilizer means no crops. No crops means the grocery store starts looking like a museum. And polymers? That's your sneakers, your laptops, your water bottles. The supply chain isn't just delayed, it's being physically rerouted around a continent. Look at these bars. This is the inflation tax of war. While your salary probably stayed the same, the cost of natural gas jumped 55% in 2 weeks. Urea, that's fertilizer, up 28%. This is a structural shock. This isn't a temporary price hike. This is the world deciding that cheap stuff is officially a thing of the past. It's like the entire world just got a 30% pay cut overnight. So who's pulling the strings? We've got a geopolitical fracture that would make a tectonic plate blush. It's not just us versus them anymore. It's a messy, high-stakes game of economic chicken where everyone is losing, but some are losing faster than others. The US is trying to put out the fire with a garden hose, dumping their emergency reserves to keep prices down. Meanwhile, Iran's new leadership has realized they don't need to win a war on the ground if they can win it in the global markets. They're using asymmetric warfare, which is fancy talk for hitting you where it hurts most, your wallet. And China? They're stuck with 55 ships sitting in the middle of a war zone, trying to figure out how to keep their factories humming without starting a world war. Where does this end? We see 3 paths. 50% chance? A long, painful stalemate where oil stays above $100 and the world slides into a recession. 30%? We get naval convoys and a corridor of safety. But the 20% nightmare scenario? A total escalation where production sites are bombed. If that happens, Brent hits $200. That's not a recession. That's a back to the 1800s scenario. The old energy order is dead, buried, done. Whether you're an investor or just someone trying to plan for next month, business as usual is a fantasy. You need deep data, not just headlines. At HDIN Research, we don't just track the news, we track the fallout. If you need the full, unvarnished data on how this conflict is reshaping your industry, reach out to us. Because in this new world, the only thing more expensive than energy is ignorance.